Imagine a world where your gasoline prices double overnight. Picture factories shutting down, their production lines silenced due to energy shortages. This is the stark reality facing the United States after Canada, its northern neighbor and longtime energy supplier, is going to make the unprecedented decision to halt all oil exports to the U.S. because of Trump's tariffs. The news sent shockwaves through the global economy, signaling a seismic shift in energy geopolitics and the relationship between the two North American allies. How could this happen? What drove Canada to take such a drastic step, and what does it mean for the future of North America and the world? The immediate impact of Canada's decision was profound. The U.S., heavily reliant on Canadian oil for decades, found itself grappling with a sudden and significant energy deficit. The ripple effects were felt almost instantly, with gasoline prices soaring, energy-intensive industries facing production cuts, and a palpable sense of uncertainty gripping the nation. Canada's bold move marked a drastic departure from the historically close energy ties between the two countries, raising urgent questions about the calculations and motivations behind this dramatic shift. To understand the magnitude of Canada's decision, one must delve into the historical context of U.S.-Canada energy relations. For over a century, the two countries shared a symbiotic energy partnership. Canada, endowed with vast oil reserves, found a ready and willing customer in its southern neighbor. The U.S., with its insatiable appetite for energy, saw Canada as a reliable and secure source of oil, crucial for fueling its economic engine. This energy interdependence fostered deep economic ties and shaped the political dynamics between the two nations. However, beneath the surface of this seemingly unshakable partnership lay simmering tensions. Canadian leaders and citizens alike grew increasingly wary of their country's overdependence on the U.S. market. The U.S.'s often unilateral approach to trade negotiations, coupled with growing concerns over climate change and the environmental impact of fossil fuels, fueled a growing desire for change in Canada. Before we dive deeper into this fascinating story, we'd like to take a moment to thank you for watching. If you're enjoying the content and want to see more videos like this, please hit the like button and leave a comment below. Your support helps us create more high-quality content and keeps our channel growing. Now let's get back to the unfolding drama of Canada's bold energy moves. Canada's decision to halt oil exports to the U.S. was not a rash move, but rather the culmination of a carefully calculated strategy, driven by a confluence of economic, environmental, and geopolitical factors. Canada embarked on a path to diversify its energy portfolio and reduce its reliance on the U.S. market. Central to this strategy was a bold commitment to renewable energy sources. Canada made substantial investments in wind, solar, and hydroelectric power, aiming to transition to a cleaner and more sustainable energy future. Simultaneously, the Canadian government actively sought new energy partnerships on the global stage. Agreements were struck with China, India, and several European nations, securing lucrative markets for Canadian oil and natural gas. This strategic pivot allowed Canada to break free from its dependence on the U.S. market, emboldening its decision to turn off the oil taps to its southern neighbor. The immediate impact of Canada's oil embargo on the U.S. was swift and severe. Gasoline prices skyrocketed, dealing a blow to consumers already grappling with rising inflation. The transportation sector, heavily reliant on trucking, faced soaring fuel costs, leading to disruptions in supply chains and increased prices for goods and services. Manufacturing industries, particularly energy-intensive ones like steel and aluminum production, faced crippling energy shortages and soaring costs. Factories were forced to curtail production or shut down altogether, leading to job losses and economic hardship in regions heavily reliant on these industries. The energy crisis exposed the vulnerabilities of the U.S. economy, highlighting its overdependence on fossil fuels and the geopolitical risks associated with relying on a single supplier for a crucial resource. Across the Pacific, China and India embraced Canadian energy. While the United States grappled with the fallout of Canada's oil embargo, countries across the Pacific saw an opportunity. China and India, both experiencing rapid economic growth and an insatiable thirst for energy, wasted no time in securing long-term energy deals with Canada. Canadian oil and natural gas, once destined for the U.S. market, began flowing eastward, reshaping global energy flows and geopolitical alliances. For China, securing energy supplies from Canada was a strategic coup. It reduced China's dependence on volatile Middle Eastern oil and strengthened its hand in geopolitical negotiations. India, too, benefited from access to Canadian energy, fueling its economic expansion and reducing its reliance on coal. Canada's pivot to Asia cemented its position as a major player in the global energy market and ushered in a new era of energy geopolitics. A realigned Europe from dependence to diversification. Canada's decision to halt oil exports to the United States will send shockwaves across the Atlantic, prompting a reassessment of energy security priorities in Europe. European nations, many heavily dependent on Russian natural gas, were jolted into action by the realization that even seemingly stable energy partnerships could be disrupted. The crisis spurred a renewed focus on energy diversification and a push for greater energy independence. The European Union launched an ambitious plan to accelerate the transition to renewable energy sources, investing heavily in wind, solar, and other clean energy technologies. Simultaneously, European nations sought to diversify their energy suppliers, striking deals with North African countries, Middle Eastern producers, and even Canada for liquefied natural gas. The Rearm Europe initiative, aimed at bolstering European defense capabilities, gained momentum as concerns grew about potential energy blackmail from Russia. The Trump factor, denial, disruption, and the politics of energy. The sudden energy crisis triggered by Canada's oil embargo thrust the issue of energy security to the forefront of American politics. Donald Trump, known for his unconventional and often controversial approach to governance, responded with a mix of denial, bluster, and disruptive policies. Initially, Trump downplayed the severity of the crisis, accusing Canada of economic warfare and threatening retaliatory tariffs. As the crisis deepened and gasoline prices soared, Trump's rhetoric grew more heated. He accused Canada of conspiring with China to undermine the United States economy and called for a boycott of Canadian goods. Trump's administration implemented a series of policies aimed at boosting domestic oil production, including rolling back environmental regulations and opening up protected areas to drilling. However, these measures proved insufficient to offset the sudden loss of Canadian oil, and the United States economy continued to reel from the energy shock. A new world order, energy, alliances, and the future of power. Canada's decision to halt oil exports to the United States reverberated far beyond the energy markets. It exposed the shifting sands of global power dynamics and ushered in a new era of energy geopolitics. The old order, characterized by U.S. dominance and a reliance on fossil fuels, was giving way to a more multipolar world, where energy security, climate change, and strategic alliances were reshaping the global landscape. Canada's bold move emboldened other countries to prioritize their own energy security and seek alternative energy partnerships. The crisis highlighted the growing importance of renewable energy sources and the need for international cooperation in addressing climate change. It also underscored the risks of overdependence on a single energy supplier and the importance of diversification in ensuring national energy security. Lasting tremors. The long shadow of Canada's energy coup. Years after Canada's decision to halt oil exports to the United States, the world is still grappling with the ramifications of that momentous event. The energy crisis triggered a global scramble for resources, accelerating the transition to renewable energy sources and reshaping geopolitical alliances. The United States, once the undisputed leader in the global energy order, found itself grappling with diminished influence and the challenges of adapting to a rapidly changing energy landscape. The relationship between the United States and Canada, once defined by close energy ties, underwent a profound transformation. The era of unquestioned energy's interdependence gave way to a more cautious and pragmatic partnership, marked by a greater emphasis on diversification and self-sufficiency. Canada's bold move served as a wake-up call to the world, highlighting the vulnerabilities of a global energy system reliant on fossil fuels and the geopolitical risks associated with overdependence on a single energy supplier. It ushered in an era of energy uncertainty, but also one of opportunity, driving innovation, technological advancements, and a renewed focus on sustainability and energy independence. Please like and comment to support the channel.